Oh, aloha everyone, Joshua Hayes at BigWaveTrading.com. My charts might look a little different, and that's because Telechart is not letting me sign into version 7 this weekend, but it's letting me sign into version 18, so we'll go ahead and use it. So while the charts look different, I'm pretty much familiar with them, so I hope it doesn't bother anyone way too much, but I use the gradient color scale similar to what the E-Trade charts that I use look like. And if anybody wonders why I don't use TC 2018 instead of TC 2000 version 7 more often than not, it's for one simple stupid reason. The balance of power indicator that you see below, for some odd reason, mind-boggling to me, that the programmers and developers of Telechart can't do this, but there is no way to make price, the color pattern of price match the balance of power color pattern. I know it's a stupid reason for me not to use it, and I understand it's a stupid thing that they should be able to fix, but that's just what the situation that we're in overall. So that's why you don't see me use version 18 in my videos, because it's not the version that I mainly use to scan. What I do like about it though is that whenever I'm looking at options and everything, you can do an options chain here and then click on them and then get the option price chart matched up to the stock price. It works better on an intraday chart, but as you can see here, but it's pretty handy, pretty useful overall, and it's just something that I like to use. But when it comes to scanning, it's the other version, and that's just the way it is. So really quickly, there isn't a whole lot going on this weekend. The only new position that I have is in the very thin ultra short healthcare. I do not see any other way to take this trade on the long side, on the short side to the long side via inverse ETF other than RXD. I checked all the ones that trended up like Cure, and I looked at the put calls on all these, like just anything healthcare related. I took a look at to see if it could be traded whatsoever on the put side, and there just is not enough option, open interest, volume to do any of that. So I'm just going to try RXD. It's very thin, very gappy. If I can get filled, great. I'll be trying to get filled at the high of the day, close 29.54, and then I'll be using multiple stop levels. This will be my first stop level right here. This will be my second stop level here, my third one right there, my fourth one right there, and then I'm willing to use a fifth one right here. Remember, these are hedges, so even if the market chops around, I'm willing to give RXD all the way down to here on the final position before I cut my losses, because my long positions will more than make up for any kind of loss that RXD will produce if my long positions move higher. And if the market sells off heavily, then obviously RXD is going to run, but it's not a big enough hedge that if it fails this level or this level or this level, that I need to get completely out. So keep that in mind. RXD, it's only going to be 1% of my account capital. 5 stop levels, 29.54 the limit order. I suggest if you're a new trader, uninitiated trader, or you don't have a lot of account capital, completely please skip this one. This is just basically for me, watch and learn. It's so thin that even if a couple of members watching this right now, if you decide to take this trade, it's possible none of us are going to get filled. So it's just the way. I mean, we can get filled if it gaps down because it's an ETF. It doesn't really matter about the volume flow, but it's such a thin overall ETF that just getting filled is going to be difficult. So moving on to the sell signals, high quality BPMC is closing below its 50-day moving average, the red line on this chart, and the low a day of 328 on above average volume. I'm sorry, I do not have the volume average line here, but you can trust me, it is above average. That's a 50% sell signal. Now, with it being a confirmation close below the 50-day moving average on heavy volume, wouldn't it be a full sell signal? Well, normally it would be, but the initial long signal, don't forget, is all the way back here. So from there to there, we're still looking at a stock up. As you can see in the green on the upper left hand corner of your chart, it says it's still up over 200%. If a stock is still up 150%, when it pulls a confirmation close below the 50-day moving average. It is not a full sell signal. You can wait till it closes below the 200-day moving average. Now, BPMC was closing below this low and this low on above average volume before closing below the 200-day moving average. It then would be a full sell signal, as you would have a complete rollover and a series of 3 lower highs and 3 lower lows. But for right now, that's not the case, so it's not a full sell. TESS, confirmation close below the 50-day moving average on heavier volume, closing below multiple support levels. That does end that one, so that one's over. TESS leaving here overall with around a 22% gain from the entry signal right back here. But as you can see here, it has completely rolled over, and with it closing below that low, and basically right at that low right there, you've got a full rollover. And also you've got 1, 2, 3 lower highs. You don't necessarily have 3 lower lows yet, but with the rollover, the 3 lower highs, it's pretty clear cut. And you can see all the distribution coming in. Bop going wrong way, just not good. And then MRTN's initial long signal was here. The big gap up prevented it from being filled. My long signal was here. I gave a final cut loss on this position since it was reduced size, all the way to back to this low. I think right here, it was this low right there. As you can see, it never got to there, but whenever it started to play around with the 50-day moving average, obviously this became my final stop level. This morning, or on Friday morning, it gapped below it, triggering my stop, but on an end-of-day basis, confirmation close below the 50-day moving average on above average volume, with the stock down right around 8%, so it is a full sell signal. If you have anything of MRTN left, you move all of your stops to 1 cent below the low, 20.50, since it's a 5-cent stock. If it hits 20.45, if you're still long, you will then be completely out. And same with BPMC. Really quick, let me show you if I was still long, which I'm not, how I'd set it up. You have 50% here. I would have 25% here, and then I would have my final 25% there. So 25, 25, and then 50 right there for BMPC. And then the final sell signal, SKX, crashing below the 50-200-day moving average on huge volume following an earnings miss. We went long here on this candle right there. We started to take profits there, hit some profit taking there. Then it started to knock out a lot of profits here as I started to adjust all my stops higher. And then right here, it knocked out more. So I was only left with 8 shares coming into today, so that turned out pretty well. But let's say that you even had a lot from the initial position, you still, by the end of it all, only lost 2%. And that's how you want it to work. Now, so that's all the sell signals. There was only one stock I flagged as a potential long, GMED. And let me explain something. Can't really see it on this chart, but GMED initially on this day here, you can see the big volume surge. Intraday before the close, it was looking like a new long position, had the green bop, had the volume surge, was near the high of the day, looked really good overall, but by the close, reversed it. Started base sideways, was kind of interested in this day, but as you can see, bop fell from the session before. Well, it finally broke out on Friday, but as you can see, it's wedging higher. You do not see the 2 lines drawn here, but it's extended from the 10-day moving average, which is about right there, and the 20-day moving average, and it's pretty extended from this pivot point level, the breakout previous highs right there. So here's how I would play it if I didn't already have a ton of positions, really wanted to get long GMED. I got to be honest, with it doing that little dipsy-do here and now breaking out here, you know, if GMED runs to 100, I will not be surprised. So if you want GMED so bad, let's say I really wanted GMED really bad, what I would do is the high of the day of here is 51. This high day is 51.01. I would place a good to cancel buy limit order at 51.02, 1 cent above the high of the day of the 413 bar. So I would try to get long at 51.02, the high right there. It's kind of hard to see. Not chase. You could also use this high, 51.34. I would not consider that chasing. So anywhere between 51.02 and 51.34, you could put a limit order, get filled. If you get filled and GMED moves higher, great. If it doesn't, there's your first stop level right there, the 417 low. There's your second stop level right there, your 46 low, and there is your final stop loss level right there, or maybe here. So you could have 1, 2, 3, 4 stops. You could just have 1. You could have 1, 2, you could have 1, 2, 3. I'm not you. Each individual is different. You can place them where you'd want to, but even though I'm not making this trade, let's say I had no long positions and I really wanted GMED, that's how I would play it. All right, everyone, I'll see you in the chat room Monday morning. Aloha.